APEC leaders seek free trade progress at annual summit. Vietnam to welcome the second wave of merger and acquisition. Hello and welcome to another edition of Bizline, your weekly economic magazine here on VTV International. I'm Minh Hằng from Hanoi, and let's now take a look at several highlights from last week's economic scene. The plenary sessions of the APEC summit opened on Tuesday in Beijing, China, with free trade at the top of the agenda as APEC leaders sought to narrow differences on how to open up trade across the vast region. President Trương Tân Sang led the Vietnamese delegation to attend the event. Chinese President Xi Jinping stressed the APEC summit this year was an important milestone and acknowledged the great achievements in its 25 years journey of forming and developing the community. APEC leaders to the event also emphasized its contributions to narrowing the development gap and promoting strong sustainable growth of member countries, contributing to improving the strategic positions of the Asia-Pacific region. President Sang earlier on Monday met with Asia-Pacific businesses and asked them to make efforts to implement the APEC connectivity framework with special attention to mobilizing capital and promoting public-private partnerships. Also on the sideline of the 22nd APEC Economic Leaders meeting, President Trương Tân Sang and leaders of the other 11 Trans-Pacific Partnership negotiation countries gathered in Beijing for their fifth high-level meeting to discuss the impasse that has stalled the TPP negotiation process. At the meeting, the leaders assessed the talks and discussed measures to restart the negotiation. They stressed that the TPP should aim at economic growth, job generations, and enhancing the competitiveness of member countries while ensuring sustainable development. For his part, President Trương Tân Sang said Vietnam was determined to closely work with other countries to reach a comprehensive agreement for development and benefits of all the negotiating partners. At the Monday meeting, the TPP countries' leaders adopted a joint statement claiming that negotiations would take into account the different levels of development of the partner countries. National Assembly deputies on Monday approved a targeted GDP growth rate of 6.2%, a consumer price index or CPI of 5%, a decline in the rate of poverty of between 1.7% and 2%, and job generation for 1.6 million people. In order to attain these targets, the National Assembly has asked the government to take drastic measures to restructure the economy and growth model. Vietnam also continues to reform the administration, particularly procedures on investment, constructions, land, customs, and interest rates. Also on Monday, the legislatures voted to approve a resolution on the state budget for next year. The maximum overspend rate shall be 5% of the GDP, or equivalent to an estimated $10.6 billion. The Vietnamese government successfully issued $1 billion worth of 10-year sovereign bonds into the international market last week. 437 investors placed their orders with a total value of $10.6 billion in purchasing orders. 84% of the buyers were investment funds, 12% are banks, and the remaining are insurance companies and pension funds. This reissue marks the return of Vietnamese bond to the global market and is the result of efforts by the Vietnamese government to control debts and manage financial resources. National flag carrier Vietnam Airlines launched its first IPO on the Ho Chi Minh City Stock Exchange on Friday. The airlines offered 49 million shares, equivalent to 3.475% of its charter capital, at an initial price of $1.047 per share. Vietcombank and Techcombank were the major buyers, accounting for 98.6% of the total shares offered. It is reported that 1,608 investors, including 28 foreign ones, registered to buy 1.04 million shares. According to a representative from the Ho Chi Minh City Stock Exchange, the sessions was attended by the highest number of investors since the beginning of this year. Samsung recently decided to pour an additional $3 billion into Vietnam for its new project. With this move, the company will increase its total investment in Vietnam to $11.2 billion, making it the country's biggest foreign investors. Located next to the first $2 billion value manufacturers and has been in operation since March this year, the new plant is expected to manufacture the latest mobile phones. When operational, the two plants will generate 100,000 jobs. Currently, Samsung alone accounts for 20% of the country's total exports. Those are several highlights from last week's economic scenes. Up next, we will talk more about the second wave of merger and acquisition activities in our Crosstalk. Following the global economic downturn of 2008, Vietnam's economy was fraught with instability, a sharp decline in the stock market, a freeze in the real estate sector, and a sluggish growth across the board. The first wave of Vietnam's merger and acquisitions, or M&A wave, took place from then to 2013, during which Vietnamese companies were undertaking restructuring process to overcome the crisis of 2008. The M&A inflow jumped from $1 billion in 2009 to $5 billion in 2012, and now this market is set up for a second wave with an expected total value of $20 billion in the next 4 years. So how will this second wave develop from the first wave? What lesson can be drawn from the first to apply into the second one? Our VTV reporter Linh Huong sat down to talk with Mr. John Diddy, chairman of KPMG Vietnam, to find out the answers to such questions. But before getting to their talk, let's get an overview of Vietnam's M&A market during the first wave.
M&A value peaked in 2012 with $5 billion and two major deals between foreign companies and Vietnamese private firms. In January 2012, the US-based KKR & Company poured in $200 million into the Masan Consumer Corporation, a manufacturer of sauces and seasonings. This private equity firm bought a 10% stake in this unit of Masan Group in 2011. In May, U.S. fund Warburg Pincus bought 20% of the retail unit of Vingroup Company for $200 million.
Hai cái vụ M&A này đúng là đình đám đấy. Và nếu mà đánh giá ở những nét tổng quan nhất ấy, thì nó thể hiện mấy cái thế này này. Nếu mà gọi là đánh giá đấy, một là cái quy mô rất là lớn. Đấy, toàn trên 150 rồi 200 triệu đô cả. Thì đấy là về mặt nó đáng kể ở chỗ đó. Cái đánh giá thứ hai á, nó đem lại cho cái đối tác Việt Nam á, hai cái anh hùng mạnh thì hùng mạnh thêm ở góc độ cái quy mô của vốn được mở rộng và cái bước tiến của hai cái tập đoàn Việt Nam này nó vững chắc hơn nhiều.
M&As are also a solution for loss-making firms. Early this year, Long An Food Processing Export Joint Company, which had debts of dozens of thousands of dollars, sold 24% of its stocks to Pan Pacific Vietnam. This brought high hopes for shareholders who trust in the experience and financial capability of Pan Pacific.
We'll face a restructuring. Many companies face such things, and we see the opportunity to bring value. So we're very excited by LaFuco. And our deputy CEO has joined the board of LaFuco and is taking an active role understanding the company, focusing on its operations, and improving the business.
The first wave did not only see foreign investors as buyers, but also domestic enterprises active in acquiring others. In 2011, Thiên Minh Group, a tourism and hospitality investment company, spent $45 million to buy out the shares and debts of EEM Victoria Limited, a subsidiary of the French-based EEM Holding Company. The deal enabled this Vietnamese group to acquire 5 Victoria hotels and resorts, all 4 or 5-star standard.
Thì chủ trương về lâu về dài cũng là sẽ cố gắng phát triển cái mặt khách sạn này. Thì khi mà có Victoria vào thì cái năng lực quản lý khách sạn của Thiên Minh cũng nâng lên. Cái dịch vụ khách hàng mà đi du lịch với cả công ty Thiên Minh, và khi ở khách sạn Victoria thì cũng đánh giá rất cao về chất lượng dịch vụ.
Mr. John Diddy, thank you very much for agreeing to our interview.
You're welcome.
First of all, between 2008 and 2013, a wave of M&A deals hit Vietnam with a total value of $5 billion. What do you think about this value?
Well, I think the value is important, but I think what is more important is the trend during that time in terms of the types of investors, the types of transactions and the volume of transactions. Foreign M&A is only one source of capital for Vietnam, and what showed was that there was confidence in Vietnam and confidence in the companies here. The absolute number, not so important. The underlying sentiment, very important.
In your opinion, which are the most notable M&A deals in Vietnam during this first wave?
There are a number of notable transactions for different reasons. I think Masan's ability to attract a number of investors such as KKR, TPG, Mount Kellett Capital and others into their consumer business, into their mining businesses, I think that showed great confidence in Masan and great confidence in the management. I think there's been a number of significant transactions in financial services, into Vietcombank, into Vietinbank and into a number of other banks. Again, significant in terms of dollar value, but significant in terms of investor confidence in the Vietnamese economy.
Before we talk about Vietnamese enterprises as the sellers, let's talk about their roles as the buyers. Do you think that there are a lot of companies like Thiên Minh?
There's not enough. Thiên Minh, they bought a chain of hotels that fitted well into their strategy, and that was not bought in an opportunistic manner. It was bought because Thiên Minh had a vision to say, we are a travel business, we own travel operations, we own a boat, and we need to build a chain of hotels and a train. So they're offering consumers a full package of experiencing Vietnam from a travel point of view. So that was an interesting transaction. Again, it was interesting also because Thiên Minh has foreign shareholders themselves who have a significant equity interest. I think the management there are experienced in dealing with international transactions, so they were able to consummate that, and it's worked well for them.
In your opinion, how active are Vietnamese enterprises in looking for other companies to buy?
I think Vietnamese companies looking to buy other Vietnamese companies has been a little bit slow. I think the understanding of the value of M&A, the understanding of how important inorganic growth strategies can be to a business, the understanding that it requires integration post-transaction, different management styles, different skill sets, I think that has been challenging. Many Vietnamese companies, particularly in the private sector, have been internally focused on their own growth, on building their own capacity, on their own management teams and systems and processes. So it requires a different way of thinking when you start to look outwards for opportunities in the marketplace.
And how do you think about the interest of foreign investors in buying Vietnamese companies in this first wave?
I think there is still a lot of interest. One of the things that has happened over the last probably 3 or 4 years is that other nearby countries have started to become a little bit more popular. The Philippines now is a much more attractive investment destination than it was 5 years ago. Indonesia has become more attractive as an investment destination. Myanmar is starting to emerge and open its doors, albeit probably still 15 years behind Vietnam. So there is increased regional competition for foreign capital. At the same time, Vietnam has gone through a difficult period a couple of years ago. We had higher inflation, we had high interest rates, we had and still have significant NPLs within the banking sector. So Vietnam was a little bit flat and the rest of the region was picking up a little bit. Having said that, if Vietnam has the right opportunities for investors at the right price, then I think it's still a very, very attractive market.
In the second wave, Vietnam's M&A value is estimated to reach $20 billion, of which $5 billion is to come from the equitization of state-owned enterprises. Vietnam Airlines launched its initial public offering, or IPO, on the Ho Chi Minh City Stock Exchange this Friday, November the 14th. According to the equitization plan for Vietnam Airlines approved by the Prime Minister, the state capital in Vietnam Airlines will be maintained while more shares are issued to raise the charter capital of the airlines. During the IPO, the airlines offered nearly 49 million shares, which makes up 3.5% of its total capital. According to the airline's officials, Vietnam Airlines is currently worth more than $2.7 billion, including over $1.5 billion invested in aircraft. The airline is expected to have a charter capital of $662 million after equitization. Its first shareholders meeting is set for March the 12th, 2015. Mobifone recently split from the VNPT group for restructuring purposes and plans to launch its IPO in 2015. If Mobifone is allowed to sell 25% of its shares to strategic partners, it will bring in $850 million.
The equitization or privatization of state-owned enterprises in Vietnam is expected to fill the M&A sector from now until 2018. Its value is expected to reach $5 billion, or a quarter of the entire value of the M&A sector. How do you think about the feasibility of this value?
Look, I think the government's equitisation plan has been, to be honest, a little bit stop-start. I think they have recommitted to the equitisation and reform program in the last 12 months. There's been a lot of very positive news. They're now starting to talk about the equitisation of some very significant companies, Venatex, Venalines, Satra, big successful state-owned groups. Because an important part of the equitisation program, it's not just the government's desire to sell businesses, it's investors' desire to own those businesses. And if the government offers not very attractive businesses at high prices, investors are not going to be interested. So I think what is going to be different over the next year or 2 years is that some very sizable and successful businesses are going to be equitised, and foreign investors look at that and say, what a great opportunity to move into market-leading companies, sector-leading businesses that they couldn't do in the past. Now, whether $5 billion is the right number, or $3 billion, or $4 billion, or $6 billion, again, I think we will only know that in 5 years' time. What is important is that the government stays committed to the program and that they offer good assets at reasonable prices.
SOE equitization in Vietnam is said to have been slow recently. In your opinion, what will be the accelerators of this process in the coming time?
Look, I think it has been slow. I think there are a number of things that will change that. Firstly, the government's commitment to the equitisation program. It was a difficult market over the last few years to equitise and sell businesses. It wasn't particularly attractive, and the government needs to balance the desire to equitise and therefore bring in new capital and new management and reform with the price they will get for the assets they're selling. And that is a difficult equation to balance. If we wait and wait and wait and hope for higher and higher prices, then nothing happens. If we sell everything very cheaply, then it all happens, but the government doesn't receive as much inflows. So it's a difficult thing to balance. I think the government's commitment to reform, I think their willingness to sell significant interest in good companies, I think the relaxation of other restrictions around bank ownership, listed company ownership by foreigners, I think lower corporate tax rates. The government is offering a suite of regulatory changes which create a much more attractive environment. Vietnam's involvement in ASEAN, in the Trans-Pacific Partnership, all of these things create a better investment environment. It doesn't mean people will necessarily buy, but it means the government is creating a more attractive environment in which they can buy.
How much interest do foreign investors have for Vietnamese state-owned enterprises in the second wave?
What foreign investors are generally interested in, it doesn't matter whether it's an SOE or whether it's a private enterprise, they're interested in how much value can that company create in the years ahead. Now, one of the challenges with state-owned enterprises is even once they are equitised, there is often a lot of change that needs to happen in terms of leadership, strategy, management, process, and it is that willingness to change the business and how people behave that sometimes in the state sector can be more difficult and it takes longer. So if you have two businesses that are broadly the same, one with a management team that is open to change and willing to change, that is more likely to be attractive to investors, domestic or foreign. It's not just a foreign investor, it's a domestic investor situation. And if I'm a Vietnamese domestic investor and I have those choices, I'll invest in the company that I think can change and grow. So that is one of the challenges in the state sector. It's not just the underlying business, it's the ability for that business to change as the market changes.
Vina Capital, one of the leading asset management firms in Vietnam, has invested in several SOEs in the country. According to Managing Director Andy Ho, SOE equitization feels different this time.
In a stable environment, and you have a situation where the stock market has been increasing roughly 20% per year for the last 3 years, it makes the environment for equitization very attractive, right? So I think that's one key factor helping the government's decision to encourage some of these SOEs to equitize sooner rather than later.
SOE equitization is on the radar of many foreign investors, but there are still roadblocks in the way. Among these is a lack of information.
Các doanh nghiệp nhà nước thì là thực hiện các cái quy định về công bố thông tin về hệ thống báo cáo tài chính theo những cái quy định của nhà nước cho cái doanh nghiệp nhà nước. Và các quy định này thì thường là nó thấp hơn so với cả các cái công ty mà hiện nay đang niêm yết trên thị trường của luật chứng khoán. Và do vậy cho nên là khi mà các nhà đầu tư khi mà đến làm việc với doanh nghiệp nhà nước như vậy thì là cái thông tin nó thường là không được đầy đủ. Và do vậy cho nên là nó cần phải có một quá trình due diligence, tức là due diligence là quá trình đánh giá, và khi các nhà đầu tư vào để tìm hiểu thêm thông tin về doanh nghiệp thì họ sẽ cử những cái đoàn chuyên gia về tài chính, về thuế, và từ đó người ta đưa ra những khuyến nghị cho các cái nhà đầu tư.
432 SOEs, including Vietnam Airlines and Mobifone, have partial equitization plans, and over 4,000 SOEs are undertaking the second phase of equitization or full divestment, including Vinamilk and an FPT. The government aims to complete the equitization process within the first quarter of 2015. This has given the M&A market a nudge forward. In the meantime, foreign investors are still on the watch.
By and large, most sectors we participate in, whether it's medicine, healthcare, education, property development, construction material, oil and gas. So we participate in these sectors that contribute to the growth of the domestic economy. And then when we look at companies within these sectors, one of the key criteria we look at is management team. We like to invest in good management team. And then we look at the potential for the business to scale, right? It has to grow big. For example, when we invested in Vinamilk, it was, $500 million in market cap. Today, it's over $5.5 billion.
What are usually the concerns of foreign investors when they implement M&A deals in Vietnam?
What worries a number of foreign investors is that sometimes they're investing in a business and they're not 100% sure who owns that business, what that business does, what other connections that business has that might be important in the near term. One of the biggest obstacles to any foreign investor coming into Vietnam, not just into the state sector, but into the private sector, is the meeting of the minds regarding the future direction of the business and the expectation of shareholders. And I think one of the most important things for foreign investors to get right is to spend time understanding the expectations of the shareholders, the expectations of management, the expectations of the employees. There has to be mutual understanding, there has to be a common goal and a common vision. Then you can work together to reach that. But if you have different views and different visions, it's very difficult.
State-owned enterprises in Vietnam's mission is not just to make profit, but also to fulfill social, economic, environmental obligations. Do you think this can be a concern to foreign investors who are interested in investing in these companies?
State-owned enterprises haven't always been driven purely by the shareholder return for the government. They have social obligations, they have economic obligations, and they have obligations to society in general. Now, that's not to say that foreign investors don't care about employees and don't care about society. Of course they do, and they care about environmental issues and sustainability issues. But it's about the alignment of that understanding. So that's very, very important, and it's harder sometimes to get that in the state sector because they do have to fulfil needs to many different parts of the economy.
Experts and business insiders predict that M&A in the second wave will be not just an opportunistic move for Vietnamese enterprises, but a built-in strategy for their long-term development. What's your take on this?
Look, I think what has happened over the last 5 to 10 years is that Vietnamese companies and the leadership of those companies have matured. I think there is a better understanding of strategy. I think there is better management teams in place. I think there is a better understanding that to build a long-term, successful and sustainable business doesn't happen overnight. It requires planning, it requires thinking, and it requires a long-term view. I think companies have also learned that inorganic growth through acquisitions, through alliances, through joint ventures is one way to bring not only market share, but also to bring new management, to bring new knowledge, to bring skills to a business that might not have existed before. And that requires a level of maturity, and strategic alignment and strategic M&A is one way to do that.
So what are the lessons from the first wave that firms should draw from to apply in the second wave?
In the first wave, everybody was investing everywhere in everything. And people who were very good at certain businesses went off and decided to acquire an interest in a bank, or they decided to invest in property, or they went into new sectors they didn't understand. There was a lot of transactions where the value that was paid wasn't justified by the underlying business. There was a lot of noise and heat and froth in the market. I think one of the lessons that will come through in the second wave is that people will focus on what they are very good at doing. And if they're not very good at doing it, then they will probably not do it because it will just damage what they have. I think there's lessons to be learned by foreigners in terms of expectations management. Certainly the Japanese in recent times have been very successful investors because they are patient, because they take time, because they try and understand management and stakeholder needs. They don't buy in and then try and change everything very quickly.
Now my last question is, which field or sector will be the most exciting one for M&A activities in the coming time?
I would like to say accounting, but I'm not sure that that's true. Look, I think what we will see in the second wave is a continued focus on those sectors that offer long-term, high growth. It is going to be around the demographic changes in the population, the emergence of a middle-class sector, the increasing number of people in their late 20s or early 30s who are going to be starting families, wanting to buy apartments, wanting to have a motor vehicle, wanting to spend more on education, healthcare, pharmaceuticals. And I think another sector which it is very important to the economy, but it's challenging, is around some of the infrastructure assets. There's no doubt that Vietnam needs more roads, more bridges, more infrastructure to support the growth. It's difficult because it's long-term, it's difficult because they're big projects, but I think there will be a lot of activity in the coming years there. Again, the government is creating new regulations and new frameworks to facilitate investment in infrastructure, and I think there's some very exciting things going to be happening there.
Well, Mr. John Didi, thank you very much for sharing your insights in our Bizline today.
You're very welcome.
With experiences accumulated over the past years, Vietnamese SOE as well as private sector are ready to welcome this second wave of M&A. Vietnamese government has also shown strong determination with more favorable policies to pave the way for SOE equitization. Meanwhile, foreign companies and funds still see Vietnam as a potential destination for investments thanks to its young population and rapid urbanization. We will wait to see the exciting M&A scene that the second wave will create. And that wraps this edition of Bizline. Thank you very much for tuning in. For more information and updates, you can always log on to vtv4.vn or youtube.com/vtv4go. From our team here in Hanoi, until next time.